Jesper, welcome to the Sport Businessman Podcast. In this episode of the Sport Businessman Podcast, you are coming reflecting the name of our podcast. You have built Better Collective for the past 20 years, and we are so enthused to be hosting you and learning the story of Better Collective.
Cool. It's a pleasure to be here.
So we find it interesting to learn, firstly, what was you founded Better Collective at a very young age. So what was the opportunity that you first noticed? Was there extensive research that you had to do, or was it a feeling and entrepreneurial instinct as a young professional?
It was definitely the instinct, and we're back in the year 2002 when my co-founder Christian Kirk Rasmussen, we created our first small website. We did it in front page, and honestly didn't know much about creating websites, so it was a really trial and error, and we were able to get it up and running. And what we had learned at the time was sort of this affiliation. So like the performance-based marketing model where you're paid on true performance. And in our case, it related very much to the delivery of players to sports books and iGaming operators. What we set out to do was essentially comparing odds. We wanted to be an uh, aggregator of the space in sports betting communities. One of our early brands was bettingexpert.com, which was a community of people passionate about sports betting, sharing their views and analysis of games. It even had, for a period of time, a paid subscription. It was like a very tiny business. But what we sort of believed in as a business was the affiliation. So basically teaming up with the different sportsbook that wanted to market towards our audience, and then sort of converting them and getting paid by the performance we delivered.
Were you the first in the space, or that was helping this specific niche, or like you had to build your credibility to be to start doing affiliates for these platforms?
Yeah, no. So there were actually like plenty of small businesses and websites like ours. The way we like sort of learned about affiliation and this industry was actually in Denmark, where we saw in the evening news that there was sort of a feature of a website that sort of gave insights into how to collect bonuses with some online casinos, how to sort of fulfill wagering requirements, and then ultimately play the bonus three, and you could make some pocket money from that. That was featured in the evening news in Denmark already in 2001. And that's how we sort of stumble upon this. So there, in Denmark, there existed such sites, which we were then frequent users of. And where we then sort of ventured into creating a website ourselves was just after high school, where we had a gap year in Germany, in Berlin, where we basically saw that, oh, there weren't many websites in German about this, whereas in Denmark we actually, like, there were quite a lot. So that was the initial idea. Okay, let's build something in German and apply this business model. But there wasn't a grand vision of ending with an IPO in Nasdaq, Sweden and Denmark. It was really just two young guys having a good time doing something we thought were fun, and we could make some money from that. That was the start.
That's very interesting, and because we heard in many news outlets and platforms about the story of Better Collective, but for the main revenue streams of affiliate marketing, can you mention how it was so sustainable to become a revenue stream that later amplified to more
Mm, mm.
revenue streams?
Well, I think for us, the fundamental value creation that we do towards our business partners is that we own a significant audience which are passionate about sports. And ultimately, we also sit on an audience that we are actually affecting, being that aggregator in the space, doing the odds comparison. So we have an effect on the purchasing decisions by this very significant audience. And we started utilizing that with the affiliate model because that was, in the early days of the internet, that was just the model applied in all verticals. What we then over time developed was for like, take our North American business today. There's clearly quite a willingness in the US to subscribe in order to get insights, tooling, also within sports. So there we have built up a subscription business in addition to the affiliate business that we have created. We have also, over the years, increased our programmatic ad revenue and basically now see a strategic opportunity for the business by getting smarter and better at increasing the TPM rates we're able to command for our audience, both in the programmatic selling, but also in the direct selling that we do to all the companies looking to have advertising towards our audience. And sort of the final component of that sort of toolbox of different monetization models that we have expanded over the time is related to our talent-led business, which is a company we acquired some years back called Playmaker HQ, where we run the shows of Shaquille O'Neal, the big part. We have like the show of Shannon Sharp, where we monetize and sort of manage that predominantly via sponsorships. So there's with the podcasting and YouTube shows, there's sort of open a new category of sponsorship revenue that we can drive towards these shows, with the talent obviously receiving money, but us also being the intermediary and managing the monetization of these shows.
So after your first acquisition, the customers became the sponsors of the podcast and media platforms that you created. But in the affiliate marketing business, who were your like customers? What was there? Was there like a specific age range of bettors going on the platforms that would bring you revenues, and also how do those what do those customers look like today, also in the North American market, as college students are interested in sports a lot?
Yeah, so it's like we have in general, obviously it goes for most of the world, like our audience, in order for us to monetize it via sports betting, has to be above the age of 18. So it sort of it sets an age gate which defines sort of whom we want to target. And basically the majority of audience that we have across our brand would sort of be from the 25 to 40-ish age group. That is our target audience and biggest audience demographic. And when we look at the customers we had back in the day, it's to a large extent, obviously for those of the big brands that have survived, are still the same customers we have. So, Bet365, Unibet, we have Paddy Power, Betfair, so like all these big names that people that are a bit familiar with sports betting have surely heard about. And then there are also in the local markets we operate, there would typically be some local brands that have a great business in the local market, but aren't interested in scaling internationally. They are obviously also customers of ours. And then we sort of fairly often then see newcomers into the market with a new way of wanting to deliver sports betting. We will probably touch upon this later, but now we have the prediction markets coming into the space, very much looking for the same kind of demographic and audience that we have across all our platforms. So it really seems to me that there is just a constant sort of fresh dynamics in this industry and creating new momentum, which of course is to the benefit of our business to see that sort of constant change of potential new customers while we have some very established sort of legacy players.
Splendid. So we find it interesting to learn how about the IPO and the acquisitions that led to new revenue streams for Better Collective. If you could break that down, and then of course, let's get into the predictions markets also ahead of the World Cup. So we find it interesting to learn about how did you set up the and strategically think about which acquisitions were best for the growth of the revenue streams of Better Collective, and what was which specific aspects of a company did you look at when acquiring it?
Mm. Yeah, so we probably have sort of different waves of acquisition. So if we start with our first acquisitions and why we sort of embarked on that path, it was in the mid 2010s where we realized, okay, we actually see some others starting to consolidate the space, which leaves you with the consideration. So do you plan to be consolidated, or do you want to become a consolidator? That was sort of the first consideration we had, Christian and me as co-founders of the business. We quite rapidly saw an opportunity in, like, we were at that time, we were just in the European market, where we saw often local competitors that we knew them well, like we were meeting at conferences, and many of them like with super solid businesses, but no ambition of scaling or going in like abroad their existing market. Some of them getting to the point where I've made good money for several years. I'm now considering is it time for me to do something else? And with sort of established trust between us and them, because we knew each other from way back, they basically approach us, which is from an M&A perspective, the kind of position you want to be in. So we tried it out. We dipped our toes. We're buying similar affiliate business to the tune of 5 to 6 times earnings before tax. Very sort of cash generative businesses, where we then also could sort of harvest some synergies, maybe bringing the multiple to 4 to 5 times on the back of an integration, clearly demonstrating value creation for us. So that was sort of the outset, and that was as a private company. We funded it with cash flow coupled with some credit facilities, but ultimately getting to the point where, okay, we really feel like this is value creating. It from the full business perspective and the ecosystem, it makes sense to scale the business, reach critical mass. We are also seeing consolidation among our customers. So it became quite clear to us that it was a path we wanted to pursue further. That was like the direct instigator of the IPO, which we did in 2018, where we did a primary raise of 65 million euros to continue to fund acquisitions. And right after the IPO, basically continued buying these affiliate businesses. We had the repeal of the PASPA Act in the US for the first time, allowing for states to regulate online sports betting in the US, which then started happening more or less the same time we IPO'd in 2018. And therefore, we did some acquisitions in the US in 2019 to get a foothold and a position in that market from which we could sort of grow and expand. And that has sort of then had a geographical scope to the acquisitions, also South America some years later. And then sort of the other wave of acquisitions related to capabilities. So we bought what we dubbed a paid media business. So basically, a business which is solely buying audience via ads in Google, Meta platforms, Snap, all these hyperscalers platforms where you can go in and have a direct cost in order to drive audience. Um, and that acquisition sort of unlocked a new capability in Better Collective, which we have then sort of refined and developed significantly since. So yeah, more than tripled that part of the business since we did that acquisition. So it has very much been these sort of different kinds of unlocks that we were trying to achieve with acquisitions.
And
Uh,
please.
Yeah, no. So just to the point of them prediction markets, that is, you can say in the last 12 months has really developed, and I would probably say the last 6 months it has gone close to ballistic in terms of attention globally. For me, sort of one of the strongest indicators of how broad this has reached was that the Danish National Broadcasting Company, they did in their main podcast a full episode about prediction markets. Sort of when you get to that point, then you know more or less the entire world's population is now aware of prediction markets. And what is sort of interesting there is a dynamic where in the US, under the FTC, federal regulation allows for event trading and futures trading. And they have sort of maneuvered the prediction markets under this regulatory framework and sort of until now been successful with presenting that. So you can trade events like SpaceX IPO and all sorts of future stuff. You can also do it within sports, and that's where we have the overlap of sort of our business and the prediction markets. And since it's under a federal regime, like it opens the entire US market, whereas sports betting regulation and iGaming regulation in general is like for sports betting regulation, it has been implemented in roughly 30 states in the US, but not California, not Texas. So some of the really big states have not allowed it yet. And this is where the prediction markets sort of come in and to some extent probably serve as a surrogate for sports betting with the events trading. And we just sit on an audience that is so relevant for these guys. So a new set of customers that has come into our industry, and ultimately some that will also, I think, push the regulatory path. So maybe more states will then regulate online sports betting in order for the state to tax it, rather than under a federal regime they are not seeing any state tax.
And for our audience, can you please break down what is the scalability today for Better Collective going forward, because since 2017 you've made more than 35 acquisitions. You're looking now at the prediction markets. We were going to have the World Cup in this summer. Can you break down where is the next road of scalability for Better Collective, and where are new revenues going to be unlocked?
Yeah, and fortunately for both of us, both Italy and Denmark won yesterday.
Yesterday.
Now we just need to do the
Yeah,
final piece on
yeah.
Monday, so we can also join the World Cup. Fingers crossed.
Fingers
Um,
crossed.
no, but obviously, like the World Cup is for our business a very significant event, because it's always the biggest betting event that you have ever seen in the world when a World Cup happens. And this World Cup is particularly exciting for our business because it's like the host countries, US as the primary host, but also Canada and Mexico, means that our North American business will be, we expect at least, fully engaged with the World Cup, FIFA World Cup, whereas normally it may not get as much attention in the US because of soccer not being the number one sport over there. But this time, because they're hosting, we definitely expect to see significant interest. And for our two other core regions, South America and Europe, they are always engaged with the FIFA World Cup. And then they have expanded the number of teams. Again, why like Italy and Denmark, it's close to embarrassing that we have not qualified yet, but as long as we make it, we'll be okay. But it leads to more games. Again, sort of a driver for business, both of sort of increased advertising from our partners, and on the performance-based part, more customers delivered. So it's a very exciting summer for our business. And ultimately, sort of when we look ahead, and also from an M&A perspective, it's we are the leading player in this niche space, and sort of in recent years, I feel like we have gained more relative strength. So I definitely expect that like there will be opportunities presenting themselves that can sort of either increase to the existing base of our business in different regions, or sort of in the affiliate space, or there could be sort of potentially technological like opportunities out there that we could add. But I feel we are in a position where there aren't that many buyers in this niche vertical. So we are in a pretty good position for that.
Splendid. Thank you so much, Jesper, for sharing the Better Collective story. It was an honor to host you on the podcast, and learn from you, and also for the audience to receive your insights and advice.
Cool. It's been a pleasure being part of it, Edouard. Thanks.
Thank you.